Earnings season is in full swing. You've got four Dow components due to report this morning. Let's bring in Arian Vojdani. He's Chief Strategist at MV Financial. He's with us this morning. Good morning, sir.
Good morning. Thanks for having me.
Yeah, you know, it's amazing because if you look at really what has powered the markets higher, besides the election and besides the inauguration, it really has been an earnings-driven story. Do you think that overall the S&P can continue to deliver?
Sure, I think it can continue to deliver. I mean, as long as the economic picture remains the same, corporate earnings remain steady, healthy labor market, I think we'll continue to see more of the same. Money will keep coming into the markets. There really is no other alternative right now, so everything will rise with the tide.
Let's talk about a couple specific names, and I realize you can't comment on these, but you've got General Motors, Fiat Chrysler. This is more of an economic story, if you will, for these companies. This is about our consumers buying vehicles, our jobs coming back, you know, when it comes to, in particular, the car market, you know, really that is a barometer for the overall consumer. Do you feel good about the consumer and about their buying habits?
Sure, I think consumer confidence is up. I don't think that's always translating to spending, but I mean, again, if you're looking to invest in the market and you're gauging whether people are going to be spending in the economy, I mean, look at what the market's done already. You should be in there. You should get involved and be diversified and, you know, keep abreast of what's happening and definitely pay attention to earnings. I think it's something you don't want to disregard, but right now the market moves up and up regardless of the earnings, it seems. One
of the big drivers, of course, of the market gains that we've seen has been, in particular, the Fang stocks, technology in general, but really the Fang stocks. You know, it comes to social media, it comes to, again, this is a consumer story, an engagement story. Do you like technology as a group, as a sector?
Of course. I mean, technology has a place in every portfolio. I think you'd be amiss to leave it out of your portfolio, but again, it's the bigger picture. It's how all sectors play in. Right now, people are getting too caught up on the sector plays, and we see the rotations. We tell our clients you want to have broad exposure to everything.
So, are you more of like an ETF index type of strategist? Is that more where you have people put their money?
Depending on what kind of portfolio you have, what kind of, how much money you have. I mean, ETFs are a great way to gain broad exposure for low cost and to get diversified. Again, diversification, especially in today's kind of market where we can get complacent, is key so you ride through any type of market cycle. Again, sectors are all doing well. Technology's had its day, but we continue to see the sectors rotate. So you want to have exposure to all sectors and not have too many eggs in one basket.
Does that include financials, banking? Again, another strong performer, despite some of the issues with trading revenues at some of the major investment banks. Financials have also been strong, especially as we're in this kind of deregulatory environment, if you will, where the administration has been quietly but steadily starting to remove regulations on the banking industry.
Sure. I think the banking industry has had its day, but it will continue to do well. I mean, you know, the administration obviously benefits banking if they do pass any regulation. But again, financials are an essential part of any diversified portfolio. So I think, again, you want to have general exposure. You don't want to double up too much in anything, and you want to keep, don't get too greedy. Don't be fearful. Don't move from one side to the other because you hear about a reflation trade or you hear whatever kind of headline is taking place. You want broad exposure to the market right now.
Well, so I'm sure your clients are coming to you and saying, "Wow, this market is on fire." I mean, look at what the Dow, the S&P, and the Nasdaq have done since the election on these pro-growth strategies that we've heard from President Trump. I mean, we're talking double-digit percentages for every single index. So when somebody comes to you and says, "I'm nervous that there's going to be a sell-off," I'm nervous. I'm hearing on TV that some strategist says that that this is too good to be true. What do you tell that person?
Right. We like to remind our clients, listen, if a correction comes today, tomorrow, a month from now, everything is short-lived. It's all about the long-term view of the market. So if a correction happens and you have money on the sidelines, it's actually a good time to buy. Should you change your allocation? Should you change your portfolio? Absolutely not. That would be a mistake. It'd be time to buy. It's time to sit with what you have. Your allocation should allow you to ride through any type of downturn.
Well, it's still got to feel good to see the Dow up 26% since the election. I mean, that's never a bad thing. Arian, thank you very much.
Thanks for having me.